as investors got out of stocks yesterday and are now getting back in, what happens with that fixed income picture? Because as you look at the 10-year yield right now, we do see it making rather significant moves up, down, and all around. I want to bring in Ward McCarthy because he's going to make you less confused about all of this. Ward McCarthy's over at Jefferies, but you were the top economist guy over at the Richmond Fed. Ward, we just heard from Brian Railing that bonds are basically performing as they should be. Why then did stocks get so anxious yesterday, and why are they unafraid today, at least at this moment?
Well, I can't pinpoint the timing of why the stock market has become more volatile, but I think when you look down from a big macro perspective, it's understandable because we have a confluence of countervailing forces going on right now that we have not seen for quite some time. Specifically, the Fed is gradually moving away from accommodation, basically trying to get the economy off of training wheels. At the same time, the fiscal policy is becoming more accommodative. So it's not reasonable to expect this is going to be a smooth process. And then, of course, you'll also have a new Fed chair as well. So, this happens to create uncertainty.
Ward. Well, talk about baptism by fire. Jay Powell's first day, he was sworn in yesterday as the new Federal Reserve chief. He's watching such unbelievable volatility. I mean, is there any correlation, or is that just simply coincidence that on the first day of a new Fed head, who, by the way, the market really seemed to like when he was first announced, suddenly we see a very dramatic point swing yesterday and quite one more day again?
Well, I think there were a few things that have happened over the last week that are contributing factors. One is the Treasury let us know last week that there's going to be a lot of Treasury supply coming down the pike. We also do have Jay Powell, who's not Janet Yellen. And let's not forget, one of Janet Yellen's parting comments were that she thought the stock market was very highly valuated. So, and we've come off a long period of time where we had risk market complacency, stocks basically just continuing to grind higher. So we are really due for a correction. And right now, the big issue is it a correction or is it something more significant?
And your guess?
I think it's going to be a correction, but I also agree with the prior speaker who said it's going to take some weeks before we figure that out.
Ward, I don't mean this to be a loaded question, but Steven Mnuchin, the Treasury Secretary, a few days ago last week said, or was it, I can't even remember now, but he talked down the dollar a little bit. Oh, it was in Davos, I'm sorry, 2 weeks ago. And he said that a weak dollar can be good for U.S. trade. Yes, we know that, but for a Treasury Secretary to not wholeheartedly put a full-throated spoken word of support behind the greenback doesn't necessarily bode well for anything in the markets. So the DXY started to go negative earlier today. I'm just interested to know if you think that had anything to do with it, because people are calling me and taxi drivers are asking what was the trigger for such a big loss yesterday, and it almost seems like it was a combined group of things.
Well, I agree with you, Liz, and I think that is a factor as well. Some of the messages on the economy coming from the administration have been confusing. That's not just on the dollar, but, some of the recent moves towards putting on tariffs and this type of thing. And markets don't like that. Markets like free trade, markets like free markets. So I think that has all contributed to the uncertainty that's part of what's developed since last week.
Ward McCarthy, thank you very much. I'm sure it's
Thank you.
Certainly interesting times on your trading floor and everybody else.